the marketplace delivered triple-digit growth in the last quarter. You're starting to kind of see this holistic shift that Walmart has, strategically put together and has now been executing upon for the past few years. I think we're definitely talking in the tens of billions of dollars worth of GMV. We've covered Walmart for years on the show, talking about the rise of Walmart Marketplace, their investment in, their acquisition of Jet, their deal with Flipkart in India shortly thereafter, or somewhat shortly thereafter, another marketplace model in India. There's now more news, and I think, you're starting to kind of see this holistic shift that Walmart has, strategically put together and has now been executing upon for the past few years in how they're placing bets, how they're allocating capital, and what that means for more traditional kind of big box stores versus new digital business models and how they put that all together. So Walmart is selling their majority stake in Asda, which is a UK grocery business. They had owned this for a while. Asda was losing share in the UK. The UK is a pretty highly competitive grocery market with lots of like digital delivery business models in grocery. Asda was losing share there. And you might find that to be a little peculiar because we've seen grocery in the United States be actually a huge boon to Walmart's digital aspirations. With, for example, the order online, pick up at the store kind of functionality was and still is a huge driver of Walmart's digital growth. And they have doubled down on that with Walmart Plus, which is a highly kind of grocery-oriented subscription offering. What I like about, actually, this article put it nicely at the end of the article, given the company's big push into food retail in recent years, including the rollout of Walmart Plus, it might seem an odd choice for Walmart to exit Asda now. But it fits with the company's pivot in the past few years, focusing on higher growth businesses, be it e-commerce or emerging markets. The recent decision to put capital in growth areas such as Walmart fulfillment services, so offering fulfillment services for third-party sellers. I'm going to touch on another offering in a second of what Walmart Marketplace just announced in the United States. And emerging companies such as JD.com, which we've covered them in China. It was the kind of linear competitor to Alibaba in China for a while. Now it has been making a big marketplace push. It has been taking on kind of 3P third-party inventory and embracing that model for the past few years. Flipkart in India, a marketplace model in India, Data Nexus, and TikTok, which has been in the news about them wanting to take a stake in TikTok and use that content platform as a channel to fuel e-commerce here in the US. So you're seeing them exit these more kind of traditional, slow businesses that might be losing share and saying, how can I allocate capital into high growth areas, into digital areas, particularly into marketplace businesses, right? We saw this when Walmart bought Jet.com. It wasn't a huge sum of money for Walmart. It was a large sum of money. It was about $3.3 billion. But in that year, I think it was 2016, Walmart opened the fewest stores it had opened in 25 years, at least in the United States. So you can see that reallocation of capital, right? They opened the fewest stores in 25 years. They bought Jet.com. And since buying Jet.com, they've probably been investing roughly $1 billion a year into really fulfillment and digital e-commerce oriented fulfillment infrastructure that they needed to kind of revamp a lot of their supply chain in order to solve for delivery. Clearly with Amazon, we've seen, and faster you can get stuff to the consumer, the better. The more likely they are to buy from you and to keep coming back. So Walmart has needed to, figure out, okay, where am I a laggard? What is a slower growth market? And how do I kind of make every dollar count? And these areas that I'm describing, these are clearly the priority areas where they can kind of exit. Broadly, we like Walmart's new portfolio-based approach to its international businesses. The company seems to be monetizing more mature businesses to free capital to invest in emerging areas and countries. So that could be kind of new digital business initiatives, and or kind of emerging markets and countries. India fits both of those. On the last note here, though, for Walmart, taking a play out of Amazon's playbook here, they are partnering with Marcus, Goldman Sachs digital bank. Goldman bought this from GE, this digital bank, a few years ago, and are offered loans to Amazon sellers. Now they're doing something similar for Walmart. I think the big takeaway from this is this really helps give credence to the scale and traction that Walmart is getting with 3P third-party marketplace sellers, right? Marcus isn't going to bother to do this. Walmart isn't going to bother to do this unless they're really seeing traction with their third-party seller community. In order to get traction with a third-party seller community, you got to drive dollars to them, right? You got to bring demand to the third-party sellers, and you got to bring all these other services, whether it's fulfillment, like I was just talking about, or other value-added services and offerings like credit. He has an interesting stat in here. The marketplace delivered triple-digit growth in the last quarter. They're seeing over 100% growth. I would imagine that's kind of year over year, right? Comparing this past quarter to the prior year's quarter of growth on the marketplace, right? So this guy is talking about the third-party seller part of Walmart.com, right? Inventory not on Walmart's balance sheet, coming from third-party sellers, not 1P but 3P. So this is pretty substantial. They don't break out exactly how much GMV they have from third-party sellers, or really they kind of talk loosely about what e-commerce sales are overall for Walmart. But we've kind of done some predictions on the show in the past about, what could that split be, 1P to 3P. But, I think we're definitely talking in the tens of billions of dollars worth of GMV for Walmart Marketplace. I think Walmart might roughly be approaching 10%, but I don't think they're there yet in overall e-commerce, whether it's 1P or 3P. Just roll it all together. Walmart's doing over $500 billion in total revenue, so 10% is at least $50 billion if you take 10% of their overall global revenue. I mean, that's still a big number. When you compare that to Amazon's 2019 numbers, I think Amazon was around $270 billion in total GMV in 2019. So still a meaningful discrepancy in e-commerce numbers overall, Amazon to Walmart, but still not small and growing quickly. So this is great to see for Walmart. We're long-term very bullish on Walmart, and seeing them be the number 2 dominant marketplace behind Amazon. I mean, that's a big win. That's a big, big win. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.